Richard, results today from Anglo American. It had a profit last year. This year it's reported a big loss, and its share price has halved over the past year. What is going so badly wrong?
Commodity prices have really gone against it, and it's a diversified miner, so it's getting hit on all fronts, whether it's iron ore, whether it's platinum particularly is a bad one. The profit, the bottom line is down to $3 billion to a loss, and that's largely because it's had to impair $3.5 billion of its mainly Brazilian iron ore assets. So there's a real mess here going on of commodity prices on the one hand and paying for stuff that was decided on years ago, and the prices have gone down and made them less profitable.
Pretty tough situation to be in. As you say, a lot of it's to do with falling commodity prices. Is there very much Anglo can do about this?
Mark Cutifani, the CEO, is one of these fix-it guys. He's turned around companies before. He's had a good go here. He's cut costs by about 20% since the end of 2012, and he's got productivity up by about 17%. So he's done, if you like, the first wave of tweaks. The next thing he's done is cut capex. Now, capex, the problem here is that you need some capex just to keep a mine ticking over. And it looks as though they're now touching the bottom of what they can cut in capex on so-called sustaining capex. So that is a bit of a problem. And then today they've announced another 6,000 job cuts. So things they're pulling all sorts of levers, but my sense is that this is still not going to be enough, and there must be more fat to cut.
So more cuts to come, even though they've cut, as you say, the capex and the operating budget, the jobs there. How strong is the company? How does its balance sheet look? Is it strong enough to see it through this very difficult period?
Here's the thing. The last crisis, it should really have done a rights issue, and it didn't, and that left it with less wiggle room than, say, Rio, and certainly much less than BHP Billiton. Anglo's net debt at the moment is less precarious than it was in the last crisis. It's about 2 times full year EBITDA, so not too bad. However, Mark Cutifani is trying to sell assets. He sold 1.6 billion out of a 3 billion target. So that tells me that he's not quite comfortable yet. And so all the more reason to wonder why he paid an interim dividend, although he held it flat, when really I think they should have been thinking, let's just cut this.
Sounds like that dividend might be the next thing to go. Richard, thanks very much.